This is Bazaar Morning Call. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Monday morning, bright and early start of a new week. We are coming to you live from the CNBC TV 18 Motilal Oswal studios as always. And I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, morning.
Hi, good morning, Prashant. Good morning, Nigel.
Good morning.
Well, indeed, a brand new week and lots of cues as well. It's the fag end of the earnings season, so we have so many stocks to look at. By and large, the Nifty has been sort of facing a bit of resistance around the 22,000. Let's see how this week goes.
Well, indeed, end of earnings season always brings a smile on your face, right? It's next couple of days is going to be quite gruesome. And then Prashant tells me he's got some big plans for Valentine's Day as well. So all the best, mate.
The month of love.
The month of love, huh? All right, well, let's just make it a day of love for the markets if possible, right? But it's looking a little skittish still, and I'll tell you why. Let's just pick up from where we left off on Friday, because there was no follow-through, and that's been, something we've harped over and over and over again. So Thursday, the market sold off post that RBI action. The Nifty ended down 200 points. And like what we've seen for the last fortnight or so, there has been no follow-through. So on the downside, that is, and the market actually ended about 1/3% higher. But now 1/3% is neither here nor there. Nifty Bank, of course, was more substantial. It ended about 1.25% up. And we'll talk more about that. So essentially, day two follow-through on the indices has basically remained elusive. Now, global markets, a word in the US market, which is looking actually very strong. And you may complain that, well, it's not S&P 500, but it is S&P 5. Because, 5 stocks have contributed to the bulk of the gains on the S&P 500 this year, right? The big, mega, large caps on the technology side. But that aside, the index is what it is, and we made a record close on the S&P 500. Ended about 0.5%, 0.6% higher. The Nasdaq was even stronger with about 1.25%. So, if you want to broadly look at the drivers, stronger earnings, much stronger than, by the way, the US earnings season for the fourth quarter there has been much stronger than what we are seeing here. And I'll come to our earnings in a bit from now as well. And of course, this is something new. Markets are responding to good, strong data in a positive way. And that is the reason why I'm asking, is good news starting to be good news once again? Because, good news was perceived as bad news because rates would need to be higher. But I think there is a bit of a regime, maybe a mini regime change, which is happening in the sense that data in the US has been very strong. Rate cuts have been pushed out, but the markets are sort of viewing this in a positive kind of way. We get more. We get the US CPI, which is the big macro focal point in the US. And I think that will focus attention on the inflation numbers. The 10-year is at about just under 4.2%. Oil prices, they rose a little bit on Friday. They're at about just under $82 a barrel is where oil prices are. So that's the macro kind of a picture that we are looking at. Let's just move the graphics along. China, by the way, is on a holiday for the entire week. And this is, in a way, important because that's the market which has been falling and falling and falling. And then there's been a bit of a rebound. But no price action out of China for the next 5 sessions, actually a little more. Now, just to circle back on the levels here on the index, on the downside, important levels for the Nifty are the 20-day moving average and the 40-day exponential moving average, which have only changed a little bit from last Friday. Just under 21,700, which is about 80 points lower from where we are. That's the 20. And then the 40 exponential is at 21,450, which is a little lower. Break of these will confirm that maybe the market is in a bit of a pullback kind of a mode. The upside is 21,900 broadly, and that's an important support, a resistance which the Nifty has found it difficult to take out. We've been in a ranged kind of price action. For the Nifty Bank, resistance again is at the 20-day, which is at 45,972. Remember, we got a decent rally on Friday. And if HDFC Bank can start to bottom out a little bit and start to lend a little bit of hand of support, things on the Nifty Bank will look better. And of course, there's the 40 exponential, which is at 46,176 on the Nifty Bank. These are resistance levels. On the downside, in the very, very near term, keep supports at about 45, 600 or so. That should be the broad kind of support levels. Gift Nifty will come up on your screen. and we'll get an indication of how the price action is starting. I think a lot of the focus is not on the index anymore, it is on stocks, because as we discussed, earnings season, fag end of the earnings season, and so much is happening both on the upgrade side and downgrade side as well. 90 points, will that sustain? I mean, it's a fair enough reaction given the sharp rally in the US, but the question is, is it going to stay through the course of the day, and will we actually be able to build on it? So fingers crossed as far as that is concerned, because the texture has looked a little ranged without a real follow-through missing. Sonia.
Oh, absolutely. And today looks like it's going to be a pretty good day, right? A pretty good start for the market, up almost about 95 odd points. Let's see how we can take it from there. But give and take everything, this market has been very, very range bound. The Nifty has been in consolidation mode, and we've been facing a bit of resistance around that 22,000 mark on the index. Now, the flows have been thinning out as well. So just take a look at some of the numbers on your screen. FIs barely bought about 140 crores in the cash markets on Friday. DIs sold about 420 odd crores. So we've been gravitating in this range of 21,500 to about 22,000 as a resistance for the market, and on the downside about 20,500. So, it's been this 100, 200, 300 point trading range. We're looking at some good numbers that came in from a lot of post-market hours numbers that came in post-Friday. So Hero MotoCorp was one of them. Revenue growth very strong. Margins up 250 basis points year on year. Industry-leading numbers from Honasa Consumer as well. Strong 28% revenue growth, volume growth of 35%. So this consumption space has been doing well. On the downside, though, it was a muted set of numbers coming in from Tata Power. So the revenue growth was barely about 4%. The margins were absolutely flat, and the coal profits fell about 81%. In fact, there are many downgrades on Tata Power that have come through post the numbers. Nuvama has downgraded Tata Power to a reduce. Elara has downgraded it to a sell. So, just keep an eye out. In the fag end of the earnings season, generally you tend to see a bit of accidents like this. So some disappointments coming through on some of these larger names. But be that as it may, today is expected to be a good start. The global cues have been solid as well. It's been, 3 or 4 weeks of a big move on the upside, or ending in the green for most global markets. And perhaps we can pick up from there. 90 points in the green now is what the Nifty implied opening is suggesting. But what are you looking at this?
Well, Sonia, on Friday's trading section, actually it appeared that there was a bit of a rejig or some rotation that took place on the key indices itself, because the Nifty Bank, that was an underperformer, that became an outperformer. And if you look at the broader markets, they were relative underperformers. So I'll be interested to see whether or not the broader markets, they want to consolidate, maybe see a little bit of a time or price-wise correction, because that's been the space which has made the big money out there. So, we'll have to keep an eye out on that. What took place, though? Why did we see such a big bounce from the day's low? Well, there was the short covering bounce that played out both on the Nifty as well as the Nifty Bank. That means the indices ended higher. And you had the open interest that was lower. Even the FI data, well, it perfectly ties in out there, because they covered close on 5,000 short contracts. They added close on 3,000 long contracts. So there was a swing factor of close to around 8,000 contracts out there. They continue to remain net short, though, with close to around 64% of the positioning on the short side out there. The Nifty Bank, that saw a good bounce from the lows. And the chart should come up for you on the screen, and that will tell you the perfect picture. The 200 DMA, that was visited, but that wasn't decisively crossed. So the 200 DMA is the mark from where the Nifty Bank did see a bit of a bounce. If you just pull up a graph, it'll give you a better sense out there. Now the question is, can we get past the 20 DMA? Because the 200 DMA has got defended. On the option side, well, the 21,800 call, the 21,500 put, well, both of them were fairly active in trade, which gives us a broad range. So the options data suggesting that the bulls believe they can defend 21,000 on the downside, 21,500 or thereabouts. On the upside, the bears believe they can protect this 22,000 odd mark. So that's what the options data suggesting. In the near term, the 20 and the 50 DMA should come up for you on the screen. That's the near-term supports that you're looking at if you have taken a long trade out there. The stock that I'm looking at is ACC. It made a fresh 52-week high. Remember, the numbers look very, very good. They reported their highest ever EBITDA per ton in the last 10 quarters. And there was a good up move that we saw. Stock at fresh 52-week high. There was fresh long build-up in the future space as well. And there was a fair bit of delivery-based buying if you compare it with the recent averages as well. So that's why I just think maybe that's the one you should focus on. Numbers look quite good. And maybe the next leg of expansion for Adani Cement could come in from ACC Limited. So that's the stock that I'm looking at. But as I said, need to build on to these gains that we're seeing on the Gift Nifty. So let's see how that goes, Sonia.
All right. Thanks a lot, Nigel, for that. So lots of big cues lined up as we begin the day's trade. But let's very quickly tell you, give you some opinion rather. On the equities front, you have Jonathan Garner of Morgan Stanley, who says that Asia and emerging market equity markets have had a highly divergent start to 2024. Consistent with their new era thesis, he expects the structural outperformance of Japan and India, both driven by nominal GDP and a capex digitization agenda, reinforced by multipolar world de-risking trends. Okay, that's a mouthful, but but that's the expectation there.
Absolutely. Well, let's get you some money market views as well. B. Prasanna of ICICI Bank says exceptional strength in jobs data and gradual fading away in pricing of early rate cuts by the FOMC, supporting the dollar in the near term. He says Asian currencies weakened after soft Chinese data and dovish BOJ commentary. That's Bank of Japan. The rupee, however, he says remained in a tight range, aided by RBI intervention and hawkish MPC outcome. He expects the rupee to maintain in a narrow range between 82.8 to 83.2 to the dollar in the coming week.
All right, and on the bonds, B. Prasanna says global yields hardened last week, thereby unwinding aggressive rate cut pricing in the wake of continued stronger than expected data prints. He says back home positive momentum in bonds faced a setback post the MPC, resulting in higher yields. In spite of waning supply and continued strong investor demand, he expects the yields to consolidate, with the 10-year benchmark bond yield likely to trade in a range of 7.05 to 7.15%.
Well, we have a lot of stocks for quick action to track for you today. We get to that in just a bit. For the time being, we run you through the list though. Dr. Reddy's, ONGC, you have Hero MotoCorp, Oro Pharma, PI Industries, as well as Hunasa Consumer. All of them will be reacting to positive news flow. On the flip side, Tata Power, Divis, Bandhan Bank and MCX will be reacting to negative news flow.
All right, well, that's basically the stock list, which is coming up for discussion in a bit from now. But Ed,